And good morning to you, value investors, day traders. Hype dorks 2, across the fruited plain. Let's go. Smash the like button. I like the first comment I read here. Are Apple and Nvidia going up forever? Well, probably. Just kidding. I don't know. The reaction yesterday to the market to the Fed announcement did surprise me. I am not going to lie. I was wildly confused, but that's why we don't try to predict markets, because predictions don't make sense. The only thing, so yesterday the Fed announced, and we're going to get into it here, the Fed announced that they are going to double tapering, which was expected, and that they're going to raise interest rates 3 times next year, 3 times in 2023, and 2 times in 2024. So that would put the interest rate, do it a quarter point each time, times 8. So my assumption was going to be, we knew that they were going to double tapering, that instead of stopping to purchase $15 billion a month in mortgage-backed securities and treasuries, they were going to do $30 billion, and they were going to just reduce that 120 down to 0 very quickly, so it'll end in March. What I did not think was going to happen was they were going to talk about the interest rates that quickly, and I didn't think the reaction would be where it was. But the only thing that I can think of right now is that the market, they gave them a game plan for the next 3 years, and the markets don't like uncertainty. And there's your, I don't know how to say, I mean, there's no uncertainty now. Well, there will be if things change, but I thought it was funny what they said about maximum employment and this and that. But, oh well, let's get into some stories here. Where do we want to start? I wanted to start with the first thing. I think this was the first, right? Yes, the morning brief. Okay. So what the Fed has going for it is inflation surges, tightens loom. Okay, tightening looms. Inflation hawks rejoice. The Federal Reserve has officially, turn up the brightness here, and quite dramatically, it should be noted, executed a pivot point on monetary policy, bowing to Wall Street's demand to get serious about surging prices. A unanimous decision was set up to increase the pace of pullback on its massive bond buying. The Fed telegraphed that it stands prepared to hike interest rates as many as 3 times in 2022. That's shock. The increase 3 times didn't shock me. The reaction to the market shocked me. People, especially tech, which has led this market up, love low interest rate environments. And you're already talking to moving your interest rates up to what I assume is going to be 0.75% by the end of 2022. Every time I hear interest rate hike, I'm just baking in quarter point bump. So it could be more, who knows. Let's see. The Fed has been totally taken by surprise over the last 6 to 9 months with inflation. The problem is now that consumers are expecting inflation next year to be in the range of 6 to 8%, and those are feeding into wage negotiations. The Fed has previously described how it would be willing to overshoot its target inflation, and it did that. Yet we think the central bank has now come to recognize that it may have gotten to a more than a bargain, particularly given the inflation driven up by shortages and an explosive demand for goods that hasn't been seen in years, specifically a decade and more. Yeah, well, that's that. Why did it shock you? So everyone loves low interest rate environments, especially tech. When you have yields dropping, tech companies borrow a lot of money. They want to borrow at basically free money with those 0% rates. So if you're going to bake in 3 rate increases next year, beginning in April, 3 rate increases in 2023, and then 2 increases in 2024, I mean, this is almost like them talking out of 2 sides of their mouth, the market. But the only thing that I can think of is that they love the certainty or the prediction that's going to happen. The Fed may have to kill the stock market's rally to quash inflation. I thought it was squash. Yeah. In an apparent sigh of relief on Wednesday, stocks reversed their earlier losses following a widely anticipated announcement that the FOMC will taper. Okay, here we go. Yeah. Okay. So it's quarter point by the spring, 3/4 increased by the end of 22, another 3 in 23. We've said that multiple times. This was the interesting part that I took away from Jerome Powell's talk, and I had to read it. I didn't listen to it. I can't listen to that guy. If you want to play a drinking game, you can drink every time he clears his throat during a 30-minute speech. You might have to take 1,500 sips of whatever you're drinking because he clears his throat every 2 seconds. He acknowledged that the labor market has made much faster progress towards the central bank's goal of full employment than expected. I don't know where he's getting that from. This person from who said this? I don't know who said this, but she said, for all intents and purposes, full employment has been met. There are 11 million job openings and 4 million people that are still unemployed. So if that's what we're going to say is full employment now, okay, I guess we're living in a new world. The Fed will still be expanding its balance sheet, thus adding liquidity, except it'll just be more slowly than the 120 a month. So yippee yahoo. I hear people talking about the market crash. What is your take on this? I honestly don't have a take anymore. The market, if you go from here, we're going to talk about hedge fund manager Ray Dalio right here. Then you go to the next person. Everybody's talking about some kind of market crash, but the market just won't crash. So I don't know what it's going to take. I thought that increasing rates rapidly would be that, but hey, what do I know? Inflation in the UK has hit a 10-year high in 12 months leading into November. Ray Dalio, I'm significantly concerned about inflation. So if those of you that don't know, Ray Dalio manages the largest hedge fund in the world, Bridgewater Associates. He's written multiple books. He's a very quiet guy. Well, he was a quiet guy until 2019. And then he kind of came out of his shell and he's been talking a lot. But he said during COVID, he was like, yeah, I'm going to go back into hiding and I'm not going to come out anymore. Nobody ever really heard from Ray Dalio. And he still hasn't gone away, and he's actually written a new book. So it must be fun being in the public eye. I'm significantly concerned about it because the amount of money and credit that has to be produced is budgeted. It's a large increase. Dalio said, raging inflation is eroding the wealth of Americans. And if you look right here at the CPE, look back in the 80s, and then you look into 90s, and then, I mean, we're creeping. It's high. It is definitely high. Look in 2010. It was basically, well, it was negative, I suppose. Some people make the mistake of thinking they are getting rich because they are seeing their assets go up in price without seeing their buying power being increased. So what he is coming down to is the conclusion that buying power is the issue. There is an individual organization, a country, or empire. There is not an individual organization or country or empire that hasn't failed when it's lost buying power. To be successful, one must earn the amount that is at least equal to the amount that he spends. In a LinkedIn post, he always posts very good LinkedIn posts. I haven't been on LinkedIn in over a year, but I know he does post good ones. This is what Dalio said continuously. Now, when we look from an investor's point of view or an individual's point of view, we have to remember that you can't raise living standards by just creating money and credit. Particularly, you don't raise productivity more than that. I've studied these empires. These dynasties go back at least, since the last 500 years, and you see the same thing happening over and over again, where when there's a financial problem and the coffers are empty, they print money. And when they print money, it devalues money. And with that, you have a large gap of people at each other's throats. Then you create the risk of internal conflict and some kind of civil war. So, interesting article. Dalio's an interesting guy. He does know a lot about China, that's for sure. Summers warns markets are at risk of spontaneous deflation by next summer. Listen to this. Former U.S. Treasury Secretary Lawrence Summers warned at spontaneous deflating. Now, nobody's talked about this one yet. Spontaneous deflating of financial markets that have been pumped up by retail buying and exuberant investors. There are many who are chasing yield by taking extra risk. Highly sophisticated endowments and pension funds are behaving in that way, insofar as that it is happening in points that may or may not be sustainable. So the Fed will have a very difficult time organizing a soft landing, he said, noting that the long variables of lags between monetary policy actions and their impact on the economy. I would be establishing a presumption that the Fed will do whatever is necessary to bring inflation under control, and that quite possibly that could involve four rates increases next year. Very interesting take. I hadn't heard that one. I like when people think outside the box. Let's see what you guys are saying. Bank of England increased interest rates 1/4 point, and inflation here is 5%. Oh, so we should be increasing double that. The T word. Oh, the T word. Yeah. I hate people talking about. Oh, I hear people. Okay. Does the transport crisis much higher cost temporary? Yeah, absolutely. Alex asked, does the transport crisis, much higher cost of transport, temporarily inflate prices on everyday goods? Absolutely, it does. That is running down that is a snowball effect right there. One thing leads to the other, and that is just a part of the cake that you're baking. Intel to invest $7 billion into a new plant in Malaysia, creating 9,000 jobs. Intel will invest more than $7 billion into a chip packaging and testing factory in Malaysia, expected to begin production in 2024. Malaysia's chip assembly industry, accounting for more than 1/10 of global trade, is worth over $20 billion and has warned shortages will last 2 years. Intel says that it's going to last into 2023. And frankly, when you look at what's going on, nothing has improved still. We're still talking about the chip shortage is going to last into 2023. Okay, well, we haven't done anything to solve the chip shortage. So at some point, this is going to be pushed into 2024. This is very basic common sense. If you're not addressing the problem and you just keep talking about it, and it's not improving, then that due date, whatever you want to call it, gets pushed out further. So there you go. Intel hoped to announce new locations in the United States and Europe next year for more plants. Excuse me. Smash the like button for me, please. And Mama, despite the plunge, Cathie Wood sees her plan, whatever the hell that is, returning 40% annually in the next 5 years. So if you've been burned a little bit this year, go and invest everything in ARK. Just kidding. Sarcasm. Turns out disruptive innovation isn't the most stable place out there to put your money. Just ask Cathie Wood. Her biggest fund, ARK ETF, ARK Innovation, is down 25% year to date. The S&P is up 25% in that same period. When we go through a period like this, of course, we are going to go through soul searching and say, are we missing something? No, Cathie, you're not missing anything. Just keep buying the dip. The opportunity in our strategy rate is huge right now. We expect a compound annual rate of return of over 40% over the next 5 years. Same. Except mine's 80. Yeah. For one, Tesla remains the largest holding. Cool. XPeng is number 2. Robinhood, which is down 40% over the past month, is number 3. And she says that she can go buy the dip. UiPath, whatever that is, that's also a big holding. This is my favorite line in the article. ARK Invest recent history. ARK Invest in recent history is a reminder that the stock markets don't go up in straight lines. And even Wall Street experts like Cathie Wood aren't right 100% of the time. Adorable. Just frickin' adorable. All right, let's see what the markets are doing. 200 new individuals filed claims. I don't talk about this number anymore. For those of you that used to watch the show, well, have been like OGs, I used to talk about this number every Thursday. Now I don't, because that number is stupid, because it doesn't tell the whole story. It doesn't account for people that are no longer looking for jobs. So here we are. Markets are up about 0.5% right now. The yields, let's see what I'm interested to see what the yield reaction is tomorrow. Well, today, which is going to be reported tomorrow. Earnings. Adobe reported this morning. They're down about 9%. FedEx reports after the bell. What else do we have here? Steelcase. I know some of you are in that. Be careful. They report after the bell. And tomorrow, Darden and Winnebago. If you want to join the software, you get the 8 pillars. Retirement calculator, which is actually pretty dope. Stock analyzer tool, 8 pillars portfolio, exclusive content, which you get. And for those asking about the Manish Pabrai interview, it's coming out this weekend. $30 gets you access to everything that I just talked about, including the Discord community of 7,000 people. If you want to join the Bid and Ask Nation with me and learn how to trade, you get the Trading 101 series, you get the Employed Trader series, you get my monthly Saturday seminars, you get the Discord community of 950 plus people. $80 a month gets you in that. It goes up every month. Paul's Super Shorts, $500 a month if you want to do a one-on-one trading session with me. $750 for a 1-hour Zoom call. It is recorded. We talk about whatever you want to talk about. If you need marriage counseling, I'm your guy. $10,000 gets you a real estate deal with Paul. And that's 4 hours of his time. And you won't end up with what probably Cathie Wood does when she buys a home. All right, give me some ticker symbols. We will run through them, and we'll go from there. Can you go over Trimble today? I don't know what that is. UiPath is actually incredible. Noted. PP, I have a cold, so I'm tired. Well, hello there. I've used UiPath for work, and it's pretty useful. What the hell is UiPath? I don't think Cathie Wood is value investing. I don't think Cathie Wood is investing, period. I think Cathie Wood isn't speculating. Baba, start with Baba. I'm not doing that. Law of diminishing returns. That is actually very disruptive. I'm not going to lie. All right, what were we going to do first? TRMB. TRMB. I better have a year data. And it does. Very good. Okay, don't know what this is. Doesn't really matter. So when we start looking at this company, we are certainly in a downtrend right now. It's just consolidating, and it has been for basically 9 months, an entire pregnancy, with the exception of this little blip right here. So, what would I do here? I would wait. If I was you, I would wait to get this stochastic moving up, let this get over the 100-day moving average, and go from there. That is how I would play Trimble. Play it like a pregnancy. Intel, I don't really know what we're going to say about this. Incredible spike up. Oh, this is the day I took profits. And any of you that were around this day, when we had this jump up here, I took profits right up here at, I think it was 54.50. Right at the opening bell, I took profits up there because I knew this was going to come right back down, because this was a very, very, very dumb reaction to something that, honestly, I don't even remember what it was. The Mobileye spinoff, right? Dumb. So, big gap up. I think that was about a 10%, 8% move that day, and it came right back down, and here we are back again at $50. So, no big deal. That's what happens when you get crazy reactions like that. So what would I tell you to do right now? Just still be patient with it from a long-term perspective. Let it move into the sweet spot, see what's going to happen, and go from there. Disney. Haven't done Disney in a hot minute. All right. This gap will fill. It's just a matter of time. The bad part about this gap is that you have to get over 1, 2, 3 major moving averages, and you have terrible volume, and you haven't even touched average volume in probably the past 10 or 11 sessions. So be patient here. Let this get into the sweet spot. That's what I would do. Cool your jets. Thank you, Mo. You made me $2,500. Cool. Banks. All right. So let's look at XLF first. So, of course, when you get rising interest rates, Who loves rising interest rates? The banks. Why? They make more money. So the banks have hopped up today. This might be a good thing for the employed trader series. If we can just get Bank of America moving in this direction, all the other the entire bank sector is down. XLF is the SPY bank. So let's go and let's run through them. Let's look at Citi, downtrend, up pre-market. Let's see what's going to happen there. Bank of America, same thing, downtrend. See if we can get a reversal. Goldman Sachs, let's see, same thing, exactly the same thing. Let's look at Wells Fargo, and I feel like I'm missing one. That one's about to reverse. Let's see. I'm going back to Richard's tweet. Where is it? JP Morgan. I knew I was forgetting one. JP Morgan. Yeah, same thing. So every single one, we're seeing a gap up. The trend is down, gap up. It literally looks exactly the same. So we're just gonna have to be patient. Don't just react. Don't just try to jump in these things because the news is there. PayPal's getting that little gap up, which is very interesting. But again, this one needs to move into the sweet spot. Even over here, you need to get this trend moving forward, and then we'll be able to do something with it. Bristol Myers, BMY. Oh yeah, this is making a little nice run. So take profits going into the 100-day moving average. You have about 50, 40 cents, 60 cents to go or something. Take profits going into it and pay attention up here, because what the hope is here, this runs up, pulls back a little bit, then gets going. When this gets going in this direction, you are in the sweet spot and you create this W formation and just keep climbing like this. And maybe you'll get back to $70. We will see. Next. Peloton. Somebody wrote in here, and I don't know, I haven't confirmed this. Somebody wrote, Peloton is down 71% year to date. I don't know. Well, just keeps falling. I don't know when it's going to stop falling, and the last time this thing had a big reversal right there, it just fell right back down. So be patient with this thing. Just be patient with it. Is Best Buy a buy today? Let's see. No, it's not a buy. And I said that so quickly because I'm just looking here. Stochastics, nothing. Stochastics here. So we're not in the sweet spot. So we want to be in the sweet spot to do any purchasing. We want to be in this area on the long-term chart, and we want to be in this area on the daily chart between these two red lines. So not a buy today. If you get an engulfing candlestick today, maybe, but I doubt that this thing would jump up that high. This stochastic would jump up that high. So please be careful with that one. Peloton is canceled. Yeah, that's true. Can you look at Costco? Costco. We haven't done Costco in a little bit. My question is, should I take profits right now? Yeah, I probably would. If you haven't already, if you've already taken profits somewhere over here or over here, no need to take profits again. But if you haven't yet, I probably would. Just because you're at all-time highs, you might be getting some rollover over here, which means that this little rally that happened could just fall back into this consolidation area. Listen, I think that if you take profits, I think you'll be happy. If you don't take profits, you might be happy in a couple of days, but you might also be pretty pissed. So, excuse me. Okay, let's see. Uber. So Uber is what I want to see with Best Buy. It's in the sweet spot, waiting for the yellow line to get in the sweet spot. If you got an engulfing candlestick today like that, you would probably get into the sweet spot, and then you could go ahead and make some trade there. So very good looking stock. Just make sure you're getting consistent volume in there. That's the very hard part. Hey, Nick. I'm not blind. I'm just ignoring you saying AMD. Big gap up on SPY. Let's see what the S&P gapped up to. Yeah, so it's gapping up into all-time highs. So if we get, I want to see this stay today. What I don't want to see is this. Move up here and just go like that, and then it comes right back down here and just stays in this area. So I don't like gaps. If we can get an engulfing, let me redraw this. If we can get a movement today like this, sure, I have no problem jumping into the, never mind. Look at the stochastic. So we need to let everything settle down. This is more volatility, more chaos. This is why it's hard to catch trends in this market right now. So downtrend over here, and you need the red line on top of yellow over here. Now, I do think that the red line will cross above yellow today with this gap up. Okay, Facebook. Looking good. The only thing I don't like is this wick right here. That is a very, very big wick, and no bueno. This thing is, I bet you this thing pulls right back down to this 200 because this wick is very large. Long wicks on stocks typically mean reversal in price. So I would not be surprised to see a reversal in price. Now, the difference is here. If you have a stock that looks like this with the candle and a long wick like that, this is more likely than not going to reverse on you. What we have with Facebook is pretty big candle and then a long wick. So this has a lower probability of reversing than this one over here, but you still have the wick. You still have price uncertainty. We'll see what happens. And again, it is tech, and tech doesn't like high interest rates. So SoFi is just getting abused. And when did they go public? Was it just November? So they're a year old. So they're just coming back and they're just consolidating in this area. They have a pretty strong support level here at 1396. I guess I would follow it over here from a daily perspective. See if you can get a run up to the 100 and then take profits. By the time you get to 100, you'll be over here and then you can move right down. So it might be a nice little swing trade for you. Don't think I would touch that thing long term. Altria Group, why not? Altria Group, man, they're making a nice little run lately. So it's interesting. They're making this nice little run, and we're not in the sweet spot. Interesting. But you notice that if you look at all of these candles right here, they all have wicks on them, with the exception of yesterday. So that's good. Maybe things are calming down. But oh, Matt Jones. This gap will need to fill. Yeah, I actually like Altria Group. Keep watching it. I think I would just play it over here. Remember, you're in the overbought area. So, yeah. All right, let's do Tesla. Somebody just said Papa Elon. So I think that means Tesla. So I'm just going to do it. Anybody that talks to me anything about Elon Musk, I'm in your corner. All right, so where did it go yesterday? They went to a low of 928. What did I tell you when we got up here? When we were at $1,243.49 a share, what did I tell you back here? I said the stock price is going back to 920. We're coming back to this 920 area. And here we are, ladies and gentlemen. When you get crazy flagpoles like this, they come right back down. And we are still in a downtrend. We're still in a downtrend over here. Volume is very inconsistent. Come and join the Bid and Ask Nation. That's all I need to say about that. Net. Oh, Mimish has been asking me about Net for a while. N-E-T. Cloudflare. So when did they go public? 19. All right. So here's the good news. You're here at the support level. The bad news is you've been just completely beaten down on this. You're in a big downtrend. You're getting pretty inconsistent volume and a lot of selling volume. In my opinion, I would go and day trade this. I wouldn't even play this on a chart. It's not worth the headache. Oracle. What is Oracle? So Oracle gapped up on, I assume, earnings, right? Yep, earnings. And they're hanging up there. So the trend is trying to reverse. I do think this is going to come back down and fill this gap eventually. It might give it a little bit more run first, but the gap is going to eventually fill. So careful with that one. Roblox, RBLX. This is the weirdest company in the whole wide world. Here's the thing. So we've only gone public on May 21st. May of 2021. So I wouldn't trade this thing anywhere except from a day trading perspective. But thank you. I'm going to write that down actually. RBLX. Might throw that into a day trading portfolio. All right, Pfizer ripping as per usual. So this right here is a big flagpole. This thing is going to come back down. I'm telling you right now, we're going to come back down to this 55 to 52 range, somewhere in here. So if you are in this thing right now, consider yourself lucky. Take your profits and move on. TPR, is that, what is TPR? Tapestry? I don't know what that is. Okay. So this seems like a stock that would not be bad for swing trading, with the exception of these gaps. I wouldn't even look over here. This is too much. Over here, you see how you get this movement up and down. I think I would probably just follow that movement up and down and try to do something with it. But even then, again, I think this is more conducive to day trading than long-term stuff. ETSY. Etsy is disruptive, right? All right, so you're in this consolidation area that previously was made, sitting at the 100 and 200. Market opens in 30 seconds for you guys, for the record. I would just pay attention to it over here. Come over here from a swing trading perspective, try to grab it, move on from there. Can you and Paul... Yeah, we could try. Palantir, PLTR. Again, I would day trade Palantir. That's what I think about Palantir. Costco, we already did. NAT, Nordic American Tankers. What would that be? Well, they've been abused, haven't they? Holy. All right, so you have a 50% stock here. Here's your crazy high, crazy low, and middle ground. So for you to be able to break through this $5.50, $5 area is going to be very difficult. Be very careful on this stock. What's the average volume here? Be very careful with this one. If it was me, I wouldn't be doing it. Market is now open. I will do one more stock. Workhorse, WKHS. Are they still around? Oh, look at them. Adorable. So they're a dog stock. I wouldn't suggest putting a tracker share on here even for $5. If you want to do it from a swing trading perspective, try to run it up into the 50 or the 25 and just bounce around in that area. But all right, guys, today is Thursday. Yeah, today's Thursday. So 2 o'clock Eastern time, we're going to be doing our live stream with you guys. Got some recording to do today, and that is it. So in honor of Cathie, go make 40%, baby. And by baby, I mean my baby. See ya. Thank you.